everyone. Just let me adjust the camera a little bit. Okay, quick sound check and then we can get started for tonight. How's everyone doing this week? How was last night? Okay, audio seems to be good on my side. We can get started with a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account any particular objectives, financial situations, or needs. Therefore, at all times you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objective. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, everyone. So, I think we already have one question on the Aussie USD. What do you think with the stop loss at 68.50 if you are running a position at 69.10? This one here is a little bit tough to say because from a technical standpoint, we are dealing with 69 cents. The overall tone for this one is carries over from last night. So if you guys are wondering what's going on with the CPI last night, let me just get the numbers again. So I think I put something out yesterday in the Telegram channel in terms of what are the potential scenarios and whatnot. But let me read it out again. The inflation number it was lower. It came in at 6.4%, but this was a lot higher than what the market is expecting at 6.2%. So it's slowing down, but not by much. 6.5 to 6.4%. It's only 0.1%. That's number one. The core inflation number, even though it fell down, it didn't come to the consensus of 5.5%. It came in at 5.6%. So again, a little bit higher. The monthly core inflation, it's flat. Maybe that's a good sign. But if we take a look at the core CPI, we're still looking at underlying inflation to still continue, right? And the slowdown, it's slowing down. We haven't seen a reverse in terms of inflation or anything like that, but it's not as significant. So I think this is more on to the potential for further dollar strength, because the market would need to consider that the FOMC, they have the room to do it from an economic standpoint. There's no recession, employment is good, everything is great. The inflation is not coming off as quickly as what the market is expecting. So I think there's a little bit of adjustment in terms of the consensus for the US terminal rate from the FOMC in terms of the target interest rate. I think this one has been adjusted slightly higher following last night's CPI numbers. All right, so with that in mind, and we take a look at the Aussie USD intraday wise, it's really tough to call it a potential long. In fact, if you're trading this right now, you want to know how much of a potential move to the downside this one can trigger. We are still, there's actually a 4-hour fib that must be used, and we take a look at the 127.2%. It'll fall at 68.52. So if you go long right now and your stop loss is at 68.50, you're opening yourself to a lot of risk in terms of the Aussie USD, right? So I can get rid of the old fibs. We can use this, and I think if we take a look at the movement, we kind of need to measure a lot of the major currencies through the 4-hourly time frame instead of the hourly time frame, because the whipsaw that happened last night, it was pretty dramatic. All right, for the Aussie USD, in terms of positioning yourself for the Aussie USD, I think there's a little bit more room to go to the downside. The whole drop right now, it's not over yet. So if you're thinking, all right, I think we can jump in for a long on this one here, it is a little bit of a tough call, right? I don't mind using like key levels, key psychological levels like 69, 70 cents, 71 cents, like maybe in the pound USD with 1.2. But with the Aussie USD, I think we're looking at a momentum that still points to the downside. There's a lot of risk to go. And if we take a look at the whole movement, if I zoom in and you'll pick it up. All right. There's actually a flag on the 50-minute time frame, so this one just break through below 69 cents. So I think there's actually a little bit more room to go for the Aussie USD, right? Regardless whether you saw the flag coming or not, we are below 69 cents at this point in time. The stochastics, if we take a look at the stochastics, it's well below 20, an indication that it actually might speed up again. So for now, for Aussie USD, if you're thinking, should you be going long or should you be going short, I much prefer to go in for a short if you need to trade right now, and your stop loss would be around 69.20. In terms of your target level, that 68.50 would actually be a potential target for this one. Risk reward ratio that way is still going to give you about 1.5, right? Reasonable stop loss, 25 pips, for a potential gain of maybe 30-40 pips. I think you're looking at about 1-to-1 risk reward ratio right now. But this one here, I wouldn't go for a long, not right now. It's too fast to go in for a long, especially considering the numbers last night. Overall, it was, in a sense, it's better than what the market is expecting. So the number is actually good. Even though it's a drop from 6.5%, the CPI number is actually really good. It's at 6.4%, and that should actually boost the US dollar. That's why we saw the whipsaw a little bit. We saw the market moving up before the CPI numbers came out, and then there's a little bit of a confusion in the first hour. But following that, I think we see a complete follow up that on the dollar strength there. Does that mean the potential correction for the US dollar is it done at 61.8%? Does that mean that are we going to continue to move higher or not? At this point in time, it's a little bit unclear because we basically need to break through above 104 to call further correction in the dollar strength to continue, to call it a complete correction at 61.8%. A little bit too early to call that as well. So we'll just take this slowly, but for the Aussie USD right now, my view is I much prefer to go in for a short. It's a little bit too hasty to go in for a quick long. The overall readings from the Tenkan Sen, it's still really steep to the downside. In terms of the Kijun Sen, it is a little bit flat, so we might see market speeds up a little bit short term, but the overall tone medium term, it's still flat. It's still going to be a potential for a range bound market condition. But in terms of today, I think we are looking at a little bit more of a bearish environment for the Aussie USD. All right. So that's the Aussie USD. Next one I want to touch on before anyone asks me stuff, it's actually gold, right? Let's bring gold up. Okay. So gold, we got support at 1840, 1850. This one was okay, but I think the market breakthrough below that support right now for gold. So intraday wise, if you take a look at gold, we still got a little bit more room to go. There's potential for this one to go to 1825. In terms of projections, we are done. So if you have been shorting gold, in terms of potential projections, it's limited to just 1840. Right now, we are currently beyond projections for any downside target for gold. If we were to zoom in onto the hourly time frame, let me just bring up this chart here. Maybe it's a little bit blank. Okay, so this is the hourly on gold. Take a look at how steep the movement is on the hourly time frame. The stochastic is at, we might see a little bit of a correction, we might see a little bit of a pullback, but I'm really eyeing about 1840 to 1845 as a potential resistance for gold intraday wise. So if there's any pullback, it's likely going to be limited to 1845, 1840. All right, just running there. Those are going to be your resistance levels. I think we might actually see a little bit of a gradual gain towards 1845, but I'm not sure if it's actually going to pick up towards 1845. The key point with this one here is that you don't want to go long gold right now. There's no reason to go long gold. We take a look at the CPI numbers. We kind of expect what the FOMC is going to be doing. I think they need to continue hiking rates, and they have the room to do that. Economic indicators are pointing to a strong economy that they can actually pull that off without causing a recession. And with the latest CPI numbers, again, 6.4, 6.5 to 6.4, it's not a significant drop. It's not a significant drop in inflation that market was expecting. Market was expecting 6.2. Okay, so gold, intraday wise, you might see this flatten out a little bit just because we are out of extension targets on the 4-hourly time frame. We've gone beyond 161.8%. We've gone beyond 1840. In terms of key support for gold, we still have 1825. Is this going to continue towards 1825? I think this will still likely continue towards 1825. If we take a look at the daily time frame, we have room for this one to go towards 1825. In terms of how deep the correction is going on right now, it's about 50% at around 1825. This, we are going to see support come in just because the daily time frame, it's approaching the Ishimoku cloud, so we should be able to see support coming in at around 1825. But you know, what's the point of looking at the daily time frame if a lot of you guys are focused on what's likely going to happen, because you guys are going to be here asking what's going to happen with gold. So I think with gold, don't rush into shorting gold. I think we might actually see one more pullback. I don't know how deep the pullback is going to be. Is it going to be limited to 1840? Is it going to be 1845? It could even go towards 1850, which is around the 61.8% in terms of the correction. And also, it was the previous support level. We can take a look at this one here. Market's been finding a support around 1850, right? So this could be a potential resistance, and I would say 1840, 1850, that was the previous support range that was outlined in the outlook. I think that 1840, 1850, it's going to be your potential resistance range for gold as well. The option is there. You can do you might want to scalp the market, maybe going towards 1840 could be profitable enough for you. It's still it's a good $3, right? It's a good $3, so gold traders might want to take that. But if you're asking for my opinion, I would wait for the market to complete one more pullback, on at least intraday wise. I don't need the stochastics to do, I don't need the stochastics to go all the way up there and then come back down. I don't need that to happen, right? In fact, you can just ignore the stochastics if you want to. We might actually just be anticipating a little bit more of a pullback, and we want to see, sellers coming into the market again. So 1840 to about 1845, that would be your area where you want to be looking for a potential sell in gold. All right, if there's a rejection, as long as the hourly time frame doesn't go above 1850, I think it should be okay. In terms of how far up it can go, again, I don't know where it's going to stop. It's going to stop at 1840, 1845, 1850. You got these three levels to think about. These three levels, you need to monitor them, because if you see a rejection on gold, it's going to be very obvious. It's not going to be like, oh yeah, it's at 1840. And then it's going to slowly drag you to 1845. No, because if you see a rejection happening at 1840, the most it can go is probably 1842, and then there's going to be a sharp sell-off, because I think a lot of people are actually waiting for a shorting opportunity. They might want to cut losses if they have a long position. So any pullbacks towards 1840, 1845, 1850, I think that's a potential opportunity where buyers are going to get out, and sellers are definitely going to come in for gold. All right, so gold, pretty clear in terms of directions, instead of in terms of reasoning, in terms of logic. I just don't see any more logic right now, because we've got that CPI numbers. How the FOMC is kind of a mixed bag. Some of them are being hawkish, some of them were being a little bit more dovish, right? With Jay Powell, for example, being talking about this inflationary environment and stuff like that. But with the CPI last night, I think there's a lot more that the FOMC needs to do, and I think the market gets the message last night. So we do see a little bit of a risk aversion going on in the market, right? So for gold, I think the overall track for this one is still for a potential move lower towards 1825. We'll see what happens around 1825. Is it going to break below 1825 significantly? If it does do so quickly, then next stop would be 1800. Then we'll be back towards 1795, which was kind of the range last year for gold. All right, so that's gold. Pretty clear message on gold here. If you're thinking of having a position on gold, short-term traders, you might want to trade the correction up. You want to play it safe. You want to go with the trend. Then you wait for that pullback towards 1840, 1845. Again, you don't need to wait for the stochastics to be done. You just need to wait for price to go back up there. Okay. All right. So that's gold. I know there's going to be a lot of people are going to be asking me about gold, so I'll just cover gold first and then we'll move on. Okay, next up I want to touch base on is actually pound USD. We've got data from the UK today in terms of the inflation numbers. It was a little bit lower than what the market is expecting. Let me just read it out again. Our previous number was 10.5. The expectation was 10.3. The number that it came in was 10.1%. It's still above 10%. We're still above 10%, but it is below the market's expectation. The core inflation rate, it was 6.3%. Market was expecting 6.2%. The core inflation rate year on year came in at 5.8%. So what we're looking at is the market, the inflation really coming off, right? We're looking at a different scenario compared to the Eurozone, compared to the US, where the core inflation wasn't coming off really quickly. This one came off a lot faster. So the core CPI, it's still high. No matter how you look at it, it's still high, but it came off really quickly. So with the Bank of England, the consensus right now is for one more 25 basis points hike and then a pause, right? So in March, they're likely going to go with the 25 basis points hike, and then they will pause after March. So one more interest rate hikes, and then they will pause. With the ECB, we know how the ECB is. They're still going to be doing 50 basis points in March. And then are they going to do it again in May? We don't know, but they've pretty much confirmed 50 basis points for March. So with the US, the FOMC is likely going to need to adjust the target interest rate or the terminal rate. So I think there's a lot more interest rate hikes going on in the Eurozone as well as in the US. But for Bank of England, the consensus right now, it might change, right? If there's any revision and stuff like that, or they can change it. But right now, the consensus is for one more interest rate hike and then a pause from Bank of England, right? Maybe like what the RBA and the RBNZ does before. Okay. With that, if we take a look at the pound USD, this one here, it's a tough one. It's a real tough cookie because we got 1.2 holding on as support. The overall tone for this one here is that we are not creating a lower low yet. The overall tone for this one here is that we're still within a range between 1.2 to 1.2450. We got midway at 1.2150. Overall, it's still above the Ichimoku cloud right now. We're just testing Ichimoku cloud as support. So this one here, you need to have a lot of patience, right, and a good money management to trade the pound USD. So I know some of you guys were holding a pound USD trade. Some of you guys get out last night. I know this because we discussed it in the Telegram channel, right? We've got positions, and I can show it to you. I think we talked about this position since last week anyway. So we got these positions. We got 1, 2, 3, 4. Most of them are pretty much scaled out at 1.2150. Some at 1.22. All right, there was an opportunity for you guys to get out at 1.2250, but it was just a short window to get out. Right, if you haven't gotten out of this position, can you still hold on to this one? You still can, but your stop loss needs to be at 1.1950. Intraday wise, can this one go? I think intraday wise for this one, this is likely going to retest 1.21. So the overall tone for the pound USD actually hasn't changed. We're still we still have a strong support. I don't know what the drivers are going to be for the sterling run, but I think if we relied on the UK CPI, we're not getting it. I think we are actually seeing a little bit of a drop off in the pound USD. Sorry, in the sterling, because we take a look at the euro pound, there was a pretty wild swing in the euro pound, right? So I don't know if you guys are still in the sterling trade from last week. If you guys are still in there, how many positions do you have? Maybe you can share that with us here. This one here, just as a disclaimer, I still have one running positions on the sterling USD. Pretty much all of them last night, it was pretty much closed out above 1.2150 at this point in time. Okay, so what's the go for sterling? Should you be looking for a short position? Should you be going for a long position right now? This one here is going to be a little bit tough. I'll leave this for reference point, but we are going to look at this closer. Again, if we take a look at where it got rejected, it pretty much got rejected around 78.6%. If it spiked up to 100% as well. So if we are going by what's the current fib, if you guys are asking, okay, so which fib can we reference it from? We actually need to take on the 4-hourly time frame in terms of the fibs or swings in the market that we need to look at. Right, it's basically that. And if we switch back onto the hourly time frame, we're actually past 78.6%. So does it mean that this is going to go to 127.2? Not necessarily, because unlike the Aussie USD where it's trading below unlike the Aussie USD where it's trading below 69 cents, the pound USD is still trading above 1.2. In terms of immediate support, we still have 1.2050. Should you be going long on the sterling? If you're referring it from the hourly time frame, probably not. But if you're trading it based on the 50-minute time frame, you might be able to go a little bit towards 1.21. Maybe not. Yeah, 1.21. I think you can still reference that point, but we don't have that stop loss yet. So if you're thinking of going long on the pound USD intraday wise, your stop loss would be below 1.2050 or below 1.2. If you're looking at an intraday trade and you want to adjust your stop loss for a swing position, then you can still use the 1.1950, but I wouldn't want to have it any more than 1.1950 at this point in time. Okay, so 1.1950 is still well below the projected 127.2 on the 4-hourly time frame. Right now, we're really looking at a couple of key levels. 1.2050, 1.2 is going to play a huge part. If you're thinking of going long, okay, I think that might be a good opportunity to jump in for a quick long position, and you want to jump in right now. Your stop loss needs to be below 1.2050, and your potential target, it's going to be limited to just about 1.21, right? If you take a look at the chart, it might look like it's a huge range or whatnot, but it's literally just 33 pips and 22 pips as a potential risk. Okay, so that's sterling. A little bit flat on sterling. If you're referring this on the daily time frame, it's above 1.2. We were looking at a close above 1.2150 last night, so there's a little bit of a correction going on. Are we really trending lower? As of now, we're not there yet. I think we, go for a little bit of a short-term resistance from 7th of February, just for this month. We're borderlining that. This one is probably seen a lot clearer on the 4-hourly time frame. We're bordering on a potential breakout, but we're not there yet, and it's still too early to call this a potential break to the downside for the pound USD, because technically if we zoom out, we don't actually see a lot of change, right? So we got that reaction from the CPI last night. I think the market was overreacting a little bit, but hey, I think it's okay because it kind of pushes the pair up towards the target levels a little bit higher, right? Very, very close to the ultimate target level, which is at around 1.23. Sorry. Okay, so very close to 1.23, and yeah, this is going to be a little bit tough for pound USD to kind of determine what you should be doing. If you're thinking of maybe a long position, more on a swing trade, this brings it lower towards your stop losses. We're still looking at about 122 pips as potential stop loss. In terms of target level, you're still going to be eyeing 1.23. Risk reward ratio is still going to be about 1 to 2. So last night was actually very, very close. But yeah, if you're still on to that trade and you still have your stop loss at 1.1950, then this is going to be your view. But I'm not going to confuse you with that, because if we take a look at the small time frame on the hourly time frame, this one here, it is a little bit flat, because no matter how you look at it, 1.2050, it's still going to be a good support for pound USD. So if you're thinking, okay, I want to go for that little bit of a correction towards 1.21, do so with a stop loss below 1.2050. To me, this is just too small of a range. I don't like this kind of trade where, you know, we're only giving 22 pips for sterling to move. I think that's a little bit too risky. 30 pips as targets, I think that's a little bit too little to my liking. But again, it really depends. If you scalp the market, I think this could be a good opportunity, but don't expect crazy movement like last night, like yesterday. I don't think we're going to see that. I think the bus has left for that. Okay. All right. So no issues with the connection. Yeah, we're still connected, because I'm having issues this week with the OBS. It kind of just pauses halfway through. All right, selling in. You guys done with selling in or not? We got two resistance. This week you got 161.50, 162. Both of them are pretty much done. We got a sharp rejection at 162. For those that still stay in this trade you should get out at 161.50 yesterday, this week, right? If you're still on this trade, we have a potential new cycle on the fib, so we can get rid of this one. I'm still going to keep 162, 165. We're done with this trade. I think we can get rid of that. Right. So selling in, I'm still going to be looking for a buy on the selling in. We have just completed 61.8% retracement. You know, of course, we're not going to take it for granted. We're not just going to assume that it's going to bounce off 61.8%. So we need to assume that price could still go down to 78.6% at 160.50. Doesn't mean that you can't go long right now. You can go long if you want to. Just make sure your stop loss is going to be below 160.50. In terms of your target level, you still need to aim for the 162. I know you can actually aim more, because if we see that turnaround happening, the 127.2% is likely going to be about 162.25 or closer to 160.50. Let me just check. Yeah, it's actually at 162.50. All right. So your target level could be 162, or it could be at 162.50. This one here, it's a great risk reward ratio. Just know that you're still going to be risking about 69-70 pips initially if you jump into the market right now. Your potential target, you know, the smaller one would be at 162. That's still going to net you about 1 yen, which is 100 pips, right? Still great risk reward ratio. Only if this one traverses above 161.50. Once this one goes above 161.50, then you can move your stop losses a little bit higher to about 160.85. That's still going to leave you about 20 pips of potential stop loss. So don't use this as a stop loss. You're likely going to be taken out, because I think we need to give the market a little bit of a breathing room. For this one to come down to about 78.6%, just in case, right? I don't expect it to happen, but if you need to jump on a trade on the sterling yen, I much prefer this to be to the upside, and your stop loss needs to be below 160.50. Okay, so that's sterling yen. Let me get a quick drink. Okay, so we discussed gold. We discussed sterling yen. The yen crosses are a little bit easier today because if we take a look at the euro yen, this one here might be a little bit different. But I think there's one with the dollar Japanese yen as well. No, we gone. Only the sterling yen is giving you that opportunity because only the sterling does that little bit of a pullback. The euro yen and the dollar yen hasn't done a pullback. In fact, they might be showing potential signs of regular class A divergences. So be a little bit more careful. I'm still okay with sterling yen. The overall tone might be a little bit biased here. I'll be honest with you. But my observation for sterling is that I don't actually see a lot of change. We do see a lot of confusion in the market. There's a lot of noise yesterday, but the overall tone for sterling, despite the lower CPI numbers, it's still above 10%. So inflation is still above 10%. So the way I look at it, Bank of England might hike rates one more time. If next month's CPI number drops below 10%, then they will pause. But if the inflation fluctuates, if it just stay above 10%, it might actually go back up a little bit higher, maybe 10.5% or 10.3%, then they're likely going to stay, they're likely going to continue hiking rates, even though by just 25 basis points. But they still need to do that. It's a little bit too early to call them off. So might see a little bit of a noise going on here, but the overall tone for sterling, I still look at a potentially good bullish sterling market at this point in time. So yeah, so sterling yen, regardless of what my view is on sterling, it just doesn't pose a situation where we look at potentially shorting the sterling yen because we got momentum turning around right now. We're still above the Ichimoku cloud. We might drift a little bit just close to the Ichimoku cloud. But once we go beyond 160, 150, I think it's on track for more heights on the sterling yen. Dollar index not confirmed yet for upside or downside in the daily. Yeah, we're a little bit flat on this one here. Not really going anywhere. As I said, I think what happened pre-CPI last night was a little bit of a noise going on in the market, and then the initial market reaction was a little bit adverse. But if you take note on the potential scenarios that I posted out, then scenario number 3 was exactly what happened last night. We've got 6.4, and then the core inflation was higher than 5.5%, right? The dollar index, unfortunately, we don't have anything. It's still flat. We don't actually see signs of strengthening in the US dollar because we haven't break 104. In terms of whether or not the correction is done, I don't think the correction is done either because we're just hovering between 50%, 61.8%. The daily close is really just hovering around above 103. So we're pretty much trapped between 103 and 104. And we need to get out of this range to kind of determine the long-term strength of the US dollar. Yeah, retail sales coming out soon. Should be retail sales is in an hour's time. I don't think it's going to pose an impact, but hey, anyone's likely going to be looking for anything to trade. So keep in mind the just by analyzing what the CPI number says, it still points to dollar strength at this point in time. Okay, New Zealand yen today. New Zealand yen. Let's check New Zealand yen daily. We're a little bit flat on New Zealand yen. A little bit more to the upside, but this one is actually pretty okay, believe it or not, because we're actually flattening out a little bit. So if you use this as your key support level, it would be 83.50. So if you're thinking of going long New Zealand yen, you can do so. Just make sure your stop losses are actually below 83.50, and your potential target is still going to be capped between 84.25 to about 84.50. not a huge range at all, but well, I guess it's better than nothing, right? You can go for about 84.25 or maybe about 84.50. So risking 30-ish pips for a potential, what, 42 to about 70 pips. Reasonable. I think this is actually reasonable. If you're thinking of going long on this one here, even though this is actually inside the Ishimoku Club, but if I get rid of the Ishimoku Club and bring you the pivots, take a look at this one here. As long as we are moving above support one, as long as we can move back up above support one, then we're likely going to travel back towards the pivot level. If we take a look at where the resistance one, it's very close to 84.50. So yeah, just again the price movement, it is flat. It is flat, but you are closer to your stop loss than if you were to wait for a break above 84. Because breaking above 84, it's not going to give you a good risk reward ratio. So if you're thinking of jumping in on New Zealand Japanese yen right now, your risk is probably just about 30-40 pips max on the New Zealand Japanese yen. So I'm okay selling yen, New Zealand yen. In fact, I'm still okay on sterling. You know, whether or not, maybe as I said, I'm a little bit biased because I still have one running position on sterling. But yeah, so New Zealand yen, pretty clear answer. It is a little bit flat, but if you want to trade it, you are actually closer to support than ever. Do we see any divergences on the stochastics or whatever? Not. We don't have any divergence at all. Everything it's pretty good, right? We've got sorry, let me just get rid of that. So we got market creating a lower high. At the same time, market is also creating a higher low on the stochastics. Pretty much mimics what the price is, so there's no divergence at all that we note, at least on the early time frame. What's going on with the market? Why always too slow? I don't think the market is slow this week. If you were looking at the market last night, and if you position yourself, as I said this week, it was a little bit of a risk. I think we talked about this on the Monday's webinar. Positioning yourself before the CPI this week was it was worth it because we actually had that run before the CPI number even came out, so a lot of time to kind of decide what to do. If the market is slow, because it kind of used up a lot of its volatility yesterday. Yeah, PPI is another thing that we need to talk about. The PPI for tomorrow, let me read up the consensus. I think I only have the month-on-month number, but if we take a look at the month-on-month number on the PPI, the core PPI, it's expected to go up from 0.1% to 0.3%. The month-on-month PPI was from negative 0.5% improvement to 0.4%. As long as it doesn't miss the target, if it comes out as consensus, I think that's going to solidify that the in terms of inflationary costs is still going to be there. All right. The surprise tomorrow would be a PPI that's actually worse than the previous month's PPI. I think that would, we might see a little bit of a sell-off in the US dollar. We might see risk appetite come back into risk assets like Aussie, pound sterling, gold. We might actually see that happens, but is it going to reverse everything at this point in time? We don't know yet. But from the consensus, if it comes out as expected, then we're actually looking at more of a cost and inflation to actually go up tomorrow. All right, so very clear on this one. Euro pound, we got out of euro pound, right? I don't know what you want to say on this one here, but we were trading the euro pound earlier on Monday and kind of got out at 88. So hopefully you guys get out of this trade unscathed. So euro pound, my buy position is at 88.12. All right, my stop loss suggesting it to break even point from price go up to 89.50. because we look at the daily trend as it's still bullish. All right. So let me take a look at the daily. 89.50. A little bit too far, isn't it? 89.50. Okay, so if you jump in at 88.12, this would be your target level. We are approaching 89. Can it go to 89.50? Take a look at the limits on the 161.8%. It is actually limited at about 89.20, 89.25. So I think if you are thinking that your trade can be adjusted into more of a swing trade for the euro pound, then I would be a little bit more careful. I think this has been a good run. You know, if you plan to get out at 89, 89.25-ish range, don't get too greedy on the euro pound. 89.50 is just 25 pips away, so maybe you need to adjust your potential target level. If you want it to be safe and profitable, you're already in profit right now, right? You could actually move your stop loss to about 88.50 and lock it in if you want to let it run to 89.50. But I think you should be happy with a move on 89 on the euro pound, because you are up by 1 cent. That's 100 pips. But if you take a look at the amounts on the euro pound, you're technically getting yourself a 200 pip gain on the euro pound. I'm not gonna call euro pound, you know, significantly bullish on the daily time frame at this point in time. It is going to likely be capped at around 89. Only if we break above 89, which is then going to be a different story. Then you can go for 90, 90, 90. But you know, it's just, I think you should take what you have right now, because there's a lot more swings that's likely going to happen. If you're riding on this one swing to go all the way to 89.50, it's pushing it a little bit, right? Because we just transitioned back above the Ishimoku cloud. We might actually see a little bit of a retest around 88.50 if price does pull back, right? This one here, I'm not even sure. I'll be honest with you, the difference between now to 127.2%, it's literally about 6 pips. I would, if I were you, I would get out and just be happy with it, right? I could net myself, you say about 88.12, right? I would just say 88.15, and this is how much you've netted yourself, you know. I would get out there rather than moving a stop loss here and just get less than half of what I could be getting right now. If you are going to be trading this and you want to let it run towards 89.50, obviously that's going to be your choice, but you know, look at the opportunity cost right now. So I would actually be happy with the trade that you have right now. Okay. All right, Euro USD. We actually haven't touched base on the Euro USD today, right? It's okay. So Euro USD. Bear with me because I'm just going to zoom in instead of deleting the lines. I can't get rid of the FIBs because we still need the FIBs here on the Euro USD. All right, so at 61.8% at 1.07, we are actually fluctuating in and out of the 107 level, right? The way I look at it, because this one has closed below 107 this week before CPI numbers, it causes a little bit of a concern in terms of how strong the euro is. That's why we were shorting the euro pound on Monday. We see a little bit of a recovery post CPI, but hey, if we take a look at the movement in the Euro USD post CPI, yesterday during CPI, the spike wasn't as extreme as the way we look at it on sterling. So if my view on the the Euro USD on the daily time frame, it's actually a little bit flat. Is it too early to call this, potential strong bounce from 107? I don't really trust 107 anymore because we have broken below 107 on the Euro USD on the daily time frame. Okay, so we need to be careful if we want to call this a strong support for the Euro USD. Now, if we jump in onto the hourly time frame, all right, we are a little bit flat again, 107. We still got support, stronger support at 1.0660. In terms of resistance, we got 108, and this three blue lines are basically going to be your guide for now. If price on the hourly time frame breaks below 107 again, then we are likely going to track this lower towards 106.60. So again, my view remains the same. Just from the outlook on Monday, I'm not too keen on trading the euro this week, because all the other currencies out there, like the sterling and the yuan crosses, are giving a lot more volatility than the euro USD. I just don't like how the euro USD is actually flat. It's a little bit choppy. There's no clear direction on where it wants to go in terms of where it is on the hourly time frame. If we say, okay, if it closes below 107, then can we go short on the euro USD? Your minimum stop loss would be at around 1.0730 or about 1.0750, right? If you move your stop loss to 1.0750 and you target 1.0660, you're not going to get a 1-to-1 risk reward ratio. The minimum stop loss that you have is not even going to give you a 1-to-1 risk reward ratio. Again, the range is pretty tight. You're either risking 30 to 50 pips for a potential 30 pips gain, right? If you want to go, if it does break below 107 and you're planning to go short. So the risk reward ratio doesn't click. And if you are brave and you want to go long right now and say, okay, I'll have my stop loss maybe below 107, maybe 10 pips below 107, then I want to target the potential return towards 1.08. This one is a little bit tough, right? But even doing so, calling 88 pip gains, being in a tough situation, because in terms of risk, it's okay, but what's the point? Right now, the whole tone on this one here is that we're still dealing with 1.07. There's a potential for this one to transition below the Ichimoku cloud in 10 minutes time, and then it might actually break 1.07. So if you're thinking, okay, I want to go in long on the Euro USD, it's a little bit too early to do that. If you want to go short on the Euro USD, we need to wait for a confirmation below 1.07, and by then it wouldn't be that attractive because your risk reward ratio it's not even 1-to-1. Okay, so that's the Euro USD. Next up, it's the pound AUD. All right, let me get rid of a few stuff. Pound AUD on the daily remains flat, so we can actually clearly see where that support and resistance is going to be. Okay, and then I'll just zoom in and we reference that level. It's about 1.7475. Yeah, that's about right. 1.7475 to about 1.7450. Right, don't trade this if price is between these two levels. Okay, so far so good. But if it dips down, this is going to be a level you need to be concerned about for the pound AUD. Do I have a preference at this point in time? I don't really have a preference. I might be a little bit more biased. I think we are actually. If we take a look at how the euro pound has been pressuring the pound, sure, we might look at pound AUD as being pressured. But if we take a look at the movement on the Aussie USD and the pound USD, I think the pound will still come out ahead. And if we take a look at the hourly time frame for pound AUD, there's a little bit of a choppiness going on, but the overall tone for this one here is that this is still above the Ichimoku cloud. That much is pretty clear, right? Can we rely on a fib retracement? Wouldn't be useful to you, because if we take a look at the fib retracement, then you are looking at around between those range where the 61.8% is likely going to be. Okay, so fib retracements, it's not going to be useful either. So right now, I don't think it's a good time to jump in for a long. The stochastic doesn't need to go all the way down, but I just need it to cross above the slow stochastics. Once it does that and price is able to maintain a position above 1.7450, that's probably my cue to jump in. Now, depending on when that cross is going to happen, we either could get a new swing low that we can use as a potential stop loss. Otherwise, you're still going to refer to 1.74 as your potential stop loss, right? About 50 pips as your potential target if it does bounces off 1.7450. So I think it's reasonable, but don't jump in too quickly on pound AUD. I think this one here needs a little bit more nurturing. All right, we've done gold. Gold's actually one of the first one that I touched base on for gold. But for those that just came in, this is my view on gold on the daily time frame. We've broken through 1840, 1850. We still have 1825, right? If we go take a look at gold on the hourly time frame, so this one here, we might actually see price come back up to above 1834. If you're thinking, okay, I'll just short it right now, sure, you can short it right now, but think about how you want to trade this, because if you were to short this right now without waiting for a correction to happen, then your risk will be all the way up there. It's going to be 25 bucks, and your potential target, it's probably what, 1825, right? It's ridiculous risk reward ratio. It just doesn't make sense, right? If we have that pullback, then it makes a lot more sense. But other than that, unfortunately, I just don't see any reason to go long gold, just because we discussed the CPI, what the FOMC is likely going to be doing. No reason at all to see any strength in gold based on the US inflation numbers last night. If that was the key driver in the market, if that's basically what's driving the sentiment in the market all this time, then yeah, I just don't see any reason, any bullish reason to, you know, keep on buying gold. But again, if you have a short position on gold, then I think, yeah, great. It's broken through 1840, 1850. What I'm trying to say with this one here is that this is currently beyond extension levels that's measurable, even on the daily time frame. So yeah, this is based on the breakout. If you were to calculate in terms of the whole rally from November, then we are at about 50%, 61.8%, coming in close at about 1814, 1825. I'm not going to confuse you there, but this is what we have for gold. Right, 4-hourly time frame still indicates further drop to the downside, but if you don't have a position, we are actually very close to a potential support level. So I would just let it go there. If you have a short position, then you need to start figuring out where to, you know, start locking in your profits and whatnot. All right, Muhammad Baba is asking, which among the 3 CPI have long time effect on USD? What do you mean by the 3 CPI? If you can elaborate a little bit. If we look at these, I'll come back to Muhammad on the 3 CPI. If you can fill me in on what 3 CPI means, I'll be more than happy to take a look at it for you. All right, sterling yen. If we take a look at the sterling yen resistance at 162, it is a resistance that is strong enough to prevent movement to go up. If you look at the 4-hourly time frame, yes. The evening star pattern is formed after a significant bullish run. Isn't it too dangerous if we look for long positions for a while? You mean this evening star? Okay, if we take that evening star, we measure how much we've pulled back down. The overall trend for this one is still to the upside, right? We're not really looking at a much deeper correction. If we measure the correction on the 4-hourly time frame, it's pretty much the same as the hourly time frame. We are around 61.8 to about 78.6%. Yes, you can say that, you know, it was there risk to it. I think there would be risk to it because we need to measure the 162 level as a major key resistance that's you know, viewable on the 4-hourly time frame, visible in the 4-hourly time frame as a potential evening star. But if we take a look at the hourly time frame in terms of where we're targeting, we're not really targeting anything out of 162 anyway. So yeah, again, it's up to preference. But if you were to ask me, should you be going short or should you be going long? I much prefer to go long. Anywhere as long as it's above 160.50. Okay. Oh, okay. The three CPIs, the monthly, the yearly, and the yearly core CPI, you mean? There's actually four. You got your monthly CPI, you got your monthly core CPI, you got your year-on-year CPI, you got your year-on-year core CPI. Obviously, in terms of ranking, this is how we're gonna rank how important they are. Number one is the year-on-year CPI. This is what we call the headline inflation. Then number two, you got the year-on-year core CPI numbers, and then the monthly numbers. It's really more supplementary because we look at the monthly numbers. If we want to see if there's a significant gain or significant drop in that month, but I'm sorry, guys. In terms of looking at the inflation number, we kind of refer to the year-on-year number as our headline inflation. Okay, so which one sticks? The year-on-year number sticks, the headline inflation, and the year-on-year CPI. And the year-on-year core CPI, it's what's important. This month, we're looking at three. We're focusing on year-on-year CPI. We're focusing on the year-on-year core CPI. And we were measuring it through the month-on-month core CPI. What we were trying to look at, a lot of traders look at this month, was basically if the underlying inflation, i.e. Inflation X, auto and gas, right? Is it up or is it down or is it flat? Okay, because inflation goes down, but if the core doesn't go down, it means cost of living still goes up. All right, and that's likely going to drive prices up, i.e. what they're looking really more is more on food prices rather than anything else, right? So the thing about it is, to simplify it, year-on-year CPI, it's basically cost of goods, I guess, consumer price, right? What you pay for foods, what you pay for your basic necessities, what you pay for your gas. That all comes into the year-on-year CPI. The core CPI takes away auto and gas. So it's basically taking away the energy prices. That's giving you a much better look if food prices actually goes up, basic necessities, does it go up or does it go down? So are they important? Yes. Is one more important than the other? Yes. I think the headline CPI is what's really important, but we look at the other three. There's actually four, not three CPI numbers. There's actually more than four, but let's just simplify things with year-on-year, core and non-core, the whole CPI and the core CPI, and then the monthly core CPI and the monthly CPI numbers. Okay, the rest are supplementary, but that's the reason why when we talk about fundamentals, it's not going to be as easy as saying, all right, it breaks above a certain key level, it's likely going to go that way. It's different. For example, on the CPI, if you get that update on Telegram, you notice that I actually put three different scenarios, right? So yeah, that's the way we look at fundamentals. I think one way to look at CPI next month is going to be different, right? Because if we take a look at the numbers right now, next month is going to be different. Next month, the market is probably pricing in a little bit of a slower drop on the CPI. So next month, inflation, if it drops, then it actually might surprise us to the downside, because market consensus is that, hey, it might actually not drop as significantly anymore. So that's possibly what's likely going to happen, but we'll need to come closer and to the release date next month and look at the numbers again. We just got that last night. Yep. Okay. Problem. All right. So I think we got one more for Nasdaq and US 30. A very very brief look on the Nasdaq on US 30, and then we can wrap it up for this week. I think we are out of time soon. All right, let's take a look at Nasdaq. I don't see a lot of look. I think I don't actually see a lot of significant drop in terms of Nasdaq. Let me just go to US 30. We're not really looking at any significant movement in the US 30 and Nasdaq. This is probably the same view that I have with the pound USD. It is actually a little bit flat, so you want to call it a significant movement that we have on the Nasdaq. It's pretty much flat. We're not really breaking anything higher. We're not really dropping significantly. If we take a look at the movement yesterday, the whole CPI numbers, that's just about 394 points. The movement on Monday was actually a lot more. It was at 300 points. So this one, I'll be honest, the way I look at it, it is actually really flat, right? I can't call it a downtrend. I don't think it is a downtrend. We're bouncing off 23.6%. We're not even correcting normally towards 38.2%. So if we measure that and we take a look at the movement on the hourly time frame, you can see how choppy it is. It's actually, I wouldn't rely on it too much, because if we were to look at it, I don't need to draw it, but if I were to draw it, you'll probably get it. It's actually within a huge symmetrical triangle, but this symmetrical triangle, it's a little bit off, because if we take a look at the lows for the symmetrical triangles and all the spikes for the symmetrical triangles, that was probably influenced by the CPI numbers. So probably not a reliable gauge for this one. Okay, so I think this one here is a little bit flat. In terms of momentum, I think we're building up a little bit. In terms of base for this one here, we do have the Kijun Sen at 12,500, so that could be a reference point for today. As long as price is trading above 12,500, then I think we're still good on the Nasdaq 100. Do I prefer to go for a short or a long? A little bit flat, but I much prefer to go for a long. Do I expect crazy 200 points, 300 points movement? Probably not. Maybe not on the Nasdaq. Right? US 30, I would stay out of the US 30 at this point in time. It's just plain right inside the Ichimoku cloud, very close to around 34,000. It's kind of midway there. Not really seeing any patterns, not seeing any divergences. Might see a little bit of a resistance. Maybe around where the Kijun Sen is located, pretty much at 34,150-ish. So yeah, US 30 probably a no-go. I think with the US 30, what we might actually look at today is actually more on this one dragging inside the Ichimoku cloud rather than breaking outside of the Ichimoku cloud. So I think the equity market is still pretty undecided. And we can take a look at the dollar index as well, that we actually don't see a strong reversal on the US dollar. If it was all good and it was supposed to be good for the US dollar, why isn't it breaking above 104? So I think there's a little bit I think market is concerned, right? They want to be bullish, but they take a look at the CPI numbers again, and they're still deciding what would the FOMC do? Would they go 50? I don't think the market is thinking about FOMC going 50, but more on how much longer the FOMC is going to continue hiking rates, right? So I think I mentioned this last year in terms of the terminal rate, it's definitely going to get adjusted because the economic projection doesn't leave a lot of room for the target rates for the FOMC. So I think that's likely going to get adjusted. Okay. All right, cool. Yeah, Euro USD, Pound USD, Aussie USD, Gold, Sterling Yen, Euro Yen, Pound AUD, all of that has actually been discussed. So if you just jump in, you came in late. We're supposed to be ending this session about 5 minutes ago. So if you just jump in and you are asking about the Euro USD, wait until this session is done, and then you can watch the recording again. You can review the whole session again. Okay, cool. All right, I think we can wrap it up for this week. Again, good luck for your trades. We still have the PPI numbers tomorrow. We got retail sales number coming out in 25 minutes. Yeah, that's pretty much it. I'll see you soon, and I'll see you next week, I guess. Okay? Stay safe, guys.